Howdy, everybody. Welcome to Liberty Call for Tuesday, April 29th, 2025. Hope you're having a fantastical day out there in the interwebs. It was a nice sunny day here in Colorado. We got some black clouds coming from the, northwest. So might have some rain. So it has been fairly nice since I've gotten back here Sunday night. So the weather has been spectacular. I think we're going to have a little bit of a snowfall later in the week, but, just trace them out. So I think we're past snowblower season, which is my favorite time of year. So, all right. Well, markets are kept climbing today as strong earnings and hints of tariff relief boosted investor spirits. Trump's move to ease auto tariffs gave stocks a jolt, even as consumer confidence slumped and the trade deficit hit a record. Meanwhile, falling bond yields are stirring fresh Fed rate cut speculation. Well, I wouldn't hold your breath out there, folks, but you can. Some people think it's going to happen. I don't think it'll happen until the market actually takes a nosedive. I think that'll be the impetus for the Fed to do something. Just my personal guess. Don't take that as financial advice out there, folks. All right. So before we dive into all the news, if you could do me a favor, give me some thumbs up, like, share, subscribe, follow, and press the notification bell. All right. Well, let's hop into the markets. Dow Jones, stop popping up on my screen. Dow Jones was up 0.75%, 300 points, closed at 4527. S&P 500 up 0.58%, 32 points, closed at 5560. NASDAQ up 0.55%, 95 points, closed at 17,461. The VIX down 3.86% today. It's at 2418. Canada up 0.31%, Brazil up 0.06%, and Mexico down 2.4%. Headed to Western Europe. Germany up 0.8%. The UK up 0.55%. France down 0.24%. The Netherlands up 0.23%. Spain down 0.33%. Italy up 1.09%. Switzerland up 0.34%. And Portugal up 1.37%. Russian exchanges red today. The MOEX down 2.49%. RTSI down 1.31%. And the overnight markets, the Nikkei in Japan was up 0.38%. Australia up 0.92%. New Zealand down 0.2%. In China, the Shanghai flat down 0.05%. Same with the Shenzhen component. China A50 down 0.5%. DJ Shanghai up 0.03%. Hang Seng up 0.16%. And the Taiwan weighted up 0.81%. So those are the markets. Feeling good out there, folks? Because from one day to the next, people are happy or sad. So, the good way to do this is just not get upset. Set your portfolio. Have a game plan for where you think things are headed or where the ball is going. It's kind of like it's kind of like playing the outfield. When if you're playing center field for the Houston Astros, my favorite team, and you're Jake, it's not Marisnik, Jake, totally brain dead. Anyways, the second Jake, he's out there running around. He has to, based on the trajectory of the ball, he has to run to a certain spot. Say in left center. And, he's so that's where we're going. And same thing with your portfolios out there, folks. If you foresee that the economy is going in a certain direction, sometimes it's good to get ahead of it and just wait for things to catch up to it. Whether or not it's investing in, dividends or things like that, or stocks that pay a nice yield. You just sit and wait to, you get paid for the economy to get back on track. And then you can look at growth stocks, things like that. So anyways. All right, well, let's get into the market recap for today. S&P 500 rises on falling Treasury yields, trade deal hopes. Big tech earnings are eyed. So S&P 500 climbed Tuesday, supported by falling Treasury yields and signs of flexibility on tariffs from the White House. While investors digested a busy earnings season, President Donald Trump announced a temporary easing of 25% tariffs on cars and parts, offering short-term relief to automakers. Commerce Secretary Howard Lutnick also hinted that the U.S. is close to announcing a major trade deal, adding optimism to markets. Yeah, well, unless you actually have some details, all it does is just people jump on something in hopes of where it's going to go, and then it doesn't happen. On the economic front, Treasury yields fell sharply after a steep drop in consumer confidence. The Conference Board's April index fell to 86.0, its lowest since May of 2020, while expectations for future conditions plunged to their weakest since 2011. The Atlanta Fed's GDP now forecast for Q1 worsened to negative 2.7%, and the JOLTS job openings for March fell, underscoring growing recession fears. Again, this This is not a news flash, people. I've been saying this for like a year that eventually, when the steam runs out of all the stimulus from 2020 and 2021, we were headed into some sort of a downward cycle in the economy. I mean, you just can't continue to pour printed money onto the situation and hope it helps, because you know, eventually the person is so sick, if they got gangrene and sepsis, you can give them antibiotics and all sorts of medicines, but eventually they're just going to die because the poisons inside them are going to kill them off. So earnings reports remain a major hang on. Investors are bracing for more economic data later this week, including the Fed's preferred inflation gauge, the PCE, and April's jobs reports. Earnings reports remain a major focus. This week's features results from major tech mega caps, Microsoft, Meta reporting Wednesday, Apple and Amazon reporting Thursday. Earlier Tuesday, General Motors fell 1% despite topping earnings estimates, citing new tariffs as a reason to suspend its guidance and share buybacks. Coca-Cola gained 1% despite a drop in revenue, while Spotify slipped after offering weak guidance. UPS reported strong results but fell 0.4%. Royal Caribbean rose after raising its profit forecast. Visa, Starbucks, and Mondelez were set to report after today's close. Despite the day's gains, broader market sentiment remains cautious amid ongoing trade and recession risks. Not a shock, folks. Again, everything that's going on right. I mean, do I know the timing of everything? No. But I have a fairly good understanding of where the things are going to head. Now, if the Fed comes and pours a bunch of money into the economy, then we have to shift gears, because then, obviously, the markets are going to, on paper, appear that they're going up because everything has to get repriced. And, so that's kind of where we're at. All right, next up, article from Zero Hedge, U.S. home ownership rate falls to lowest level in 5 years. That is not the best news. U.S. home ownership rate fell to 65.1% in the first quarter of this year, the lowest since late 2019, according to the Census Bureau. Real estate site Realtor attributes the decline to a lack of affordable housing. As inventory remains below pre-pandemic levels despite recent gains. High prices and limited supply continue to challenge buyers, especially in urban areas where vacancy rates are higher than in the suburbs. While homeowner vacancy rates rose slightly to 1.1% year over year, they remain historically low, suggesting ongoing supply constraints. JP Morgan analysts note the elevated mortgage rates, consistently above 6.5% this year, are further deterring prospective buyers. They project only a slight rate decline to 6.7% by the end of this year, far from the 5% threshold needed to significantly boost affordability. Well, I think people got spoiled to basically as close to zero as you could get on mortgages. And now they think that's just the going average. I mean, 6.7% is not obscene by any stretch. I would consider that fairly normal. Based on, my young adult life and in the 90s and into the 2000s, that's what you went, that's what you paid for a car or a house or anything that you had to borrow money for an extended period of time. You had to pay a decent interest rate on that money. Excuse me. Signs of easing housing costs are emerging. However, Redfin reported that median home prices declined year over year in 11 of 50 major metros as buyer caution rises amid high costs and economic uncertainty. Some sellers are being advised to price homes more competitively to attract offers without concessions. That means lowering your prices. Meanwhile, a bipartisan group of lawmakers reintroduced the Rural Housing Service Reform Act, aiming to expand affordable housing access in rural communities. Well, I drove across Texas and New Mexico and parts of Oklahoma in the last 2 weeks, and there's a lot of houses out there that are just sitting around empty. It looks like. I mean, a lot of dilapidated, homes in small towns and things like that. I imagine you could probably snap those up fairly cheap, fix them up, and have a pretty nice house to live in. The bill would streamline USDA loan process. Why is the USDA doing loans? That's a mystery. And make home repair loans more accessible, helping preserve affordable housing options outside major cities. Despite modest signs of price softening, high mortgage rates and limited supply suggest housing affordability challenges will persist through this year, maintaining pressure on prospective buyers nationwide. Well, that's awesome. So Well, or people could save up more money and put a larger down payment so that they could have a mortgage payment they could afford. That'd be my guess. That's what I would do. All right, next up, also from Zero Hedge, why rushing to buy a car before tariffs hit might not mean a good deal. So I know a lot of people were out there in the automaker. Well, it's always truck month at Ford, and I mean I laugh at the commercials. It's always some sort of holiday. New U.S. automotive tariffs are starting to take effect this spring, creating uncertainty and fear among car buyers. While some consumers are rushing to dealerships to beat potential price hikes, experts caution against panic buying. Carl Brower of iccars.com warned that while increases are possible, they are not guaranteed, and buyers should avoid making decisions based on fear. The new 25% tariff on imported vehicles enacted in April already boosted new car sales by 22% and used car sales by 12% compared to last year, according to Cox Automotive. Inventory, especially among popular foreign brands like Toyota, Honda, is shrinking rapidly, while American brands like Dodge and Ram are moving slower. Well, I would never buy a Dodge or a Ram product. I'm a Ford guy. President Trump defended his tariffs as necessary to move to rebuild domestic manufacturing and safeguard national security. Some foreign automakers like Honda and Stellantis have already shifted production plans in response, signaling earlier success. However, experts like Brower note that scaling U.S. production to fully meet demand will take years. Trade policy expert Charles Benoit argues that the U.S. auto market has long been flooded with imports, while American cars have struggled overseas. If the tariffs succeed in boosting U.S. production, prices could eventually fall, but near-term volatility is likely. Negotiations for possible tariff exemptions are ongoing, but the immediate impact is driving consumer anxiety, dealerships sales surges, and early signs of manufacturing shifts back to American soil. Well, that is awesome news. All right. One more article here, also from Zero Hedge. We are refilling the reserve now. Energy Secretary Wright confirms SPR refill after Biden's reckless drain. What was happening when energy prices were climbing a couple years ago is that the previous administration was depleting the Strategic Petroleum Reserve to help keep prices down here domestically. And I think it was only like down to like 50% capacity. So it wasn't empty by any stretch of the imagination. That the doomers out there who like to just throw. I hate both political sides, so I don't take. I like one better than the other. I don't. If you watch me on a regular basis, you know who that is. But they're both terrible, in my opinion. So. All right. The Trump administration's efforts to refill the SPR, which was heavily depleted under President Biden in 2022, is underway, but progressing slowly, according to Energy Secretary Chris Wright. In a CNBC interview, Wright emphasized that the SPR will be refilled throughout Trump's term, but warned that the process could take years due to infrastructure damage caused by Biden's rapid drawdown of 180 million barrels. Wright criticized the Biden era release as politically motivated and noted that 2 of the 4 major salt caverns used to store are currently inoperable due to damage from rapid withdrawal. Repair work is ongoing, and additional funding is being requested to accelerate both repairs and crude purchases. In March, Wright confirmed plans to purchase $20 billion worth of crude to restore the SPR to near full capacity, a move aligned with Trump's broader energy policy focused on boosting domestic oil production and reducing regulation. The SPR was drained from 650 million barrels to roughly 395 million barrels under Biden. Congress will need to approve further funding for continued purchases, which remains uncertain. Meanwhile, WTI crude prices have dropped to around $61 per barrel amid dampened global demand expectations due to escalating U.S.-China trade tensions. Yeah, now would really be the time. If oil went down to like 20, that would definitely, fill it up as fast as you can, buy as many futures as you can at that price. However, it's not the end of the world. And, if we pumped more here, yes, we are pumping as much as we ever have here domestically, but there are still plenty of oil fields out here across the United States that we could get rid of all the stupid windmills that make the landscape look terrible as you drive across it. But that's what I would do. But I'm not in charge. No one's ever asked me to run things. So, until that day comes, I would happily fix all these problems if, I am a problem solver. That is my job. I fix people's problems. They come to me and say, "Hey, I don't know how to do this," or "I have a question about that." My job is I'm basically Google with arms and legs. I go out and find the answers and bring it back to the clients and say, "All right, here's the tax question you have, or here's a solution to whatever situation that you might be dealing with." So, all right, well, that's everything that I had to cover for today. If anyone needs anything from me, where do you go? TSAFinancialGroup.com. All your financial planning needs can be addressed there. So give me a call. I'd be happy to help. All right. Well, I hope everyone out there has a wonderful evening, and I'll talk to everyone again next time. Adios.